Comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Katie Greifeld. We're counting you down to the closing bell, and here to help take us beyond the bell. It's a global simulcast with our friends Carol Masser, Simone Foxman filling in today for Tim Stenovic, and welcome to all of our audiences across all of our Bloomberg platforms here on a Friday afternoon where we take a look back at the month and the quarter. Carol Masser, and if you bought stocks, you're in the red. If you bought bonds, you're in the red as well.
Yeah, it's been a tough quarter, no doubt about it. And I feel like there's still a lot of uncertainties about kind of what comes next in the fourth quarter. Having said that, Michael Sheldon over at Hightower RDM Financial was on with us, and he said one of the things that we kind of maybe can count on is that we are definitely near the end of this rate hiking cycle. So what does that mean? If perhaps maybe we get no more hikes, typically on average, the Fed starts actually cutting rates 8 months later. So if perchance September was the last hike, you could see maybe a cut come May 2024.
You could also potentially see some kind of optimism in the stock market even a little bit sooner. Our Terrell Holt, he worked out the numbers here. He said, don't bet against the rally in Q4, at least if you look back at the results since 1950, when the S&P 500 was up between 10 and 12% year to date by the end of September. Q4 was higher 84% of the time. We're looking at an S&P 500 that's currently up 11.7% despite all these losses this month, guys.
It'll be interesting if we see that reset, because there's been a lot of talk about how valuations have come down, those multiples, if you will, here, but they still are sort of camped out above those historical averages. And of course, right now, a lot of the key technical indicators are in play as well here. Let's walk through the numbers here. We have a lot to parse here. The Dow Jones Industrial Average down on the day here by roughly about 0.5% as we wait for these numbers to settle. That's going to give it a loss on the month of about 3.5% and a loss on the quarter of about 2.6%. The S&P 500 down 11 points on the day, or 0.3%, nursing a 5% loss on the month and 4% for the quarter. The NASDAQ Composite actually holding into the green here on this Friday afternoon, only about 0.1% here, but that's not good enough to erase some of the losses that it had earlier. 6% down on the month for September, 4% for the quarter, and the Russell 2000 also going to close out on a down note, 0.5% on the day, Carol, and 6% on both the month and the quarter.
All right, a great check, right, on the month, on the quarter, in terms of where we're ending up. I am pulling up the S&P 500 and taking a look at the individual names for the third quarter, and it is at the top of the list, largely, Katie, those energy names. Marathon Petroleum up almost actually about 30% in the third quarter, but there's a lot of energy names. At the top of the pack, you're looking at names like Dollar General, Insulet Corporation, and Solar Edge. They are some of your laggards for the third quarter.
Well, to your point on energy, it had a great quarter, but it had a terrible Friday today. Energy, that industry group, off by nearly 2%. Of course, that has been the outperformer of the week, of the past 3 months. Not so hot today. You look at what is doing well, though. You have consumer durables, you have autos, you have some of those semiconductor names. So you do have some green, but overall still very much a down day, Carol.
All right, down day. So let's get to, did I find some gainers? I actually did.
Oof,
Nike.
Got it today.
Wait. We'll see. Nike up 6.7% here at the close, up about 11% at its highs of the day. Top in the S&P 500. Earnings, we broke them down after the close last night, jumping the stock after surprise quarterly results indicated that demand for Nike's goods is actually strong and growing despite a challenging consumer environment. Everybody was worried. Revenue, though, I should point out, for their latest reporting season was shy of estimates, but nonetheless, definitely a rally in today's session. And check it out, everybody. Walgreens Boots, top in the S&P 500 and the NASDAQ 100 on this Friday. That stock ending with about a 6.4% gain. Company apparently considering a former Cigna executive, Tim Wentworth, to be its next CEO. This, according to folks familiar. What's interesting is this is someone who has been in the healthcare space in a big way. Express Scripts. He really brought about that merger with Cigna. So it's a company that we know going through some changes, if you will.
But this is it. I mean, they've been trying to pivot to healthcare.
Yeah.
And I mean, Roz Brewer, I mean, she's obviously a great executive, but she had a retail background. And, you know, at a time when they were trying to sort of be less of a retailer and more of a healthcare space.
Right, exactly. Well, maybe this guy with his experience, maybe he brings something different that she didn't, but the stock didn't do well under her. We know that. So investors may be hopeful. Fingers crossed, we will see. But anyway, so some speculation there. And then this is, I wanted to bring to you a $1.9 billion market cap biotech IPO'd earlier this year. Structure Therapeutics surging in today's session. We'll bring it up for everybody. Up almost 35%, hitting a record high. The company reported top-line results from an early-stage study of an investigational oral weight loss drug. This is a year that's all about these weight loss drugs. Anyway, maybe closing the gap with some larger competitors, but investors pretty enthusiastic about it. I feel like it's AI, it's about weight loss drugs, a few other things this year.
Has it all.
Yeah, well, yeah, maybe.
Well, one of the things that has been such a good performer so far this year has been some of these tourism names, but definitely a down day for several big tourism stocks. Start off with Carnival, which reported earnings profit for the first time for the first quarter since 2020, and record revenues in the third quarter, but saying that higher fuel costs, higher currency costs are going to have a big hit, revised down its fourth quarter outlook, and could hit the full year outlook by as much as $130 million. However, they did say no signs of consumer demand slowing down, but the markets didn't love that. Shares closing down just about 5%. Also seeing some losses in Vail Resorts, falling 8.4% today. Seeing better than expected purchases of season passes. Again, that demand story decently strong. However, Truist calling their financial outlook for the current period very light, a very mixed outlook overall. Finally, I want to call your attention to Baker Hughes. Their shares down 3.47%. And this after it talked about the U.S. oil rig count down by 5 to 502. And this is really interesting as we look ahead to OPEC next week, in part because, production, U.S. crude production reaching its second highest level on record in July, but oil field services companies may not really be convinced that this strength in the price of oil is going to continue because they're kind of cutting their oil rig production. So really interesting, a bit confusing, I think, story there. But again, looking ahead to OPEC next week.
Of course, let's take a look at yields because, of course, that was the big story in the month. Once again, benchmark 10-year yields about 46 basis points higher today than where they were at the start of the month here. You see the changes here on a daily basis here, relatively modest, but the uptick that we saw, the rate of change that we saw over the past 3.5 to 4 weeks here, I think really rattled markets. And when you start to get commentary out of, the Jamie Dimons and the Larry Finks of the world, basically saying that we are going to see rates even higher than where they are now, that causes a lot of concern. And I want to bring up the fact, guys, that we heard from John Williams over the New York Fed. And he also made it clear he doesn't think the Fed necessarily needs to raise rates, but he also made it clear that a cut isn't in the cards anytime soon. He plans to keep them there here. And I think that was a big part of the reason why you saw a bit of a reversal in the market today here in the afternoon.
Yeah, it's been interesting to see that reversal. And you add it all together, it was a pretty quiet day in the bond market, but it's also been interesting to watch how this has played into the shape of the yield curve. I want to talk about the 2-10s curve a little bit. It's still minus 47 basis points inverted, but I remember when we were in double digits over the summer. So we've really taken back a lot of ground when it comes to that inversion.
I think the tricky part now is to figure out what higher for longer means. What is that for longer? And this is what I think when it comes to any kind of asset class that's out there is like, what is the value in what higher for longer environment means? So I guess that's the tricky part. And I'm curious to see whether
Are you not taking it literally?
Well, what does higher for longer mean? It's
and can we get used to it over time? Can we get used to 30-year fixed mortgage rates of 7.3%? I mean, that seems crazy given where we were.
No.
No.
If you look at the housing market right now and there's a lack of deals being done, I think the answer to your question, Simone, is no. I mean, maybe, like I said, if this stays longer for a certain period of time, I guess there are people that are going to have no choice but who need to buy a house or are going to have no choice but to pay it. But yeah, if you don't need to, why would you?
I think the housing market, Romaine, it's a great point that you can't always pick when you're going to move. You have life changes, you need to move at some point, but I think there's going to be a lot of pent up demand. Once we actually do see a drop in rates, imagine all the people who have
Do you know anyone specifically?
I know a few people. If I look
know
inward,
somebody just buying a house. I know another couple looking at it, and some of it has to do with needs. They're growing their family.
Yeah.
They need to do it. So
Well,
it's
if you need
interesting.
to, right?
Yeah. But
And
I'm
get
saying
around
for
it.
people who maybe live in a city and they plan to be there for a while, they would like to buy an apartment, but they do the monthly
Is
math.
this you or somebody else that
No,
we
it's
know?
a completely
you're talking
hypothetical
about?
person.
Completely
with black hair.
hypothetical.
Rhymes
Maybe there's a lot of people timing the market right now.
Did you guys see the B of A data of investors trimming cash and bonds to buy U.S. equities?
Yeah, I saw that.
What did you think about that?
Well, the
don't
problem
sound
is
like
I feel like
you're
this data is conflicting because then you look at the data we got yesterday on money market funds hitting another record. So I don't know. There's certainly a rotation going on, but it's not kind of that big wholesale rotation that I think people want to see.
I just want to know who's going to the Jet game this weekend.
Taylor Swift?
Yeah,
Yeah.
who's going?
Yeah.
What if she's not there?
So
Then
And you
there
pay
will
all that
be-
money for a ticket? Aren't you going, Carol? You live right next to the Meadowlands.
yeah, I live right next to it. It's
Yeah.
like, out my back door. No, I'm not going. I'm a Giant fan, by the way.
Okay.
Oh. Ooh.
Well, yeah, I mean, it's good. Okay.
I
I mean,
know. We gotta
condolences, first of all. But yeah, I mean, it's good that
That's so true.
it's good that we have New Jersey teams to root for.
It's good that we have New Jersey in the Union. I'm just going to say.
Mm.
All right. Yeah. Hey, Katie, are you agreeing?
I agree.
All right. Where's that horse go home?
I don't know.
All right.
Yeah, maybe he's
Somewhere in
Jersey.
Weehawken,
Yeah.
I'm told.
He's not in Manhattan. I'll tell you that.
Ho-ho.
Thank God, right?
Ho-ho cuss.
All right. Get
Ho-ho
home.
cuss.
Get home
Wow.
safely. Have a good weekend, everybody. Taylor
You
or
too.
no Taylor.
Yeah.
And we will see you again to kick off the fourth quarter. Our cross-platform coverage, radio, TV, YouTube, and of course, Bloomberg Originals Beyond the Bell. We'll see you on Monday.